Today, folks, I thought it would be so much fun to look at the two sides of the border, considering that's how my portfolio is made up, largely Canadian stocks, largely US stocks. I want to talk about those individual holdings, ones I'm buying now, ones on my watch list I'm waiting for a dip. I want to talk about index funds, how I kind of navigate that from both sides of the border, including ways for you to make free money right now. This is primarily going to benefit a lot of my Canadian watchers, and if you're a US watcher, you're going to get a lot of in-depth knowledge from kind of how I think on both sides of the border. But first and foremost, coming from the US side of the border with the S&P 500 Fear and Greed Index, which, my goodness, from a year ago is fascinating at this point, sitting at an extreme greed level of 86. I'm not going to sit in this video and tell you whether I think the markets are overvalued or undervalued, because I always think it's a good proponent to constantly be cost averaging in to the broader markets. But when we're buying individual holdings, we always have to keep in mind you don't make money when you sell, you make when you buy, and usually buying at all-time highs, not the best strategy, especially if you're funneling in huge amounts of capital. But to kick this off, guys, like I said, I want to really focus on the Canadian economy here in this discussion, because most people just don't really understand the Canadian economy that well. In fact, if I asked you what makes up the largest holdings on the S&P TSX Composite, something tells me you couldn't tell me. But if I asked you what sits on the S&P 500 is the top 10 holdings, you'd be like Microsoft, Apple, Facebook, those kind of companies, right? So this should be some really cool knowledge here, because the S&P Composite isn't something that I broadly want to buy, largely because the entire Canadian economy from a stock market perspective is only trading up 50% over 5 years. We'll get way better performance from the S&P 500, but year to date has actually been keeping up with that performance of the S&P 500, trading up 23%, which is pretty incredible, right? So let's take a look at some of these holdings. But before we do, and answer that question of what are the largest holdings in Canada, I want to ask you as a Canadian investor, because a lot of you in the comment section said, what do you think about things like VFV? If I just wanted to buy an S&P 500 index, should I just buy it with Canadian dollars through this index? Because it represents VOO. It's the same exact company. It's all done through Vanguard. Just one is represented in Canadian dollars and VOO is represented in US dollars. But the crazy thing about this is I don't like this, because you can see that we're trading up 23% on VFE, but on the VOO itself, it's only trading up 27% only, but it's actually outperforming, right? Why is that? Well, that comes down to what we call Forex, currency exchange, something people are a little uncomfortable with. But from a personal standpoint, and I'm not a financial advisor, I like converting all of my currency to US dollars that I'm investing, right? And in your brokerage account, you can request to open up a US and Canadian brokerage account. And I want to get paid my dividends in US currency if I'm holding something like the VOO. And I also want to be able to sell that and keep it in US dollars. And I want to have the control over when I decide to flip it back to CAD. And I want to kind of have control over the Forex. This is how I recommend most people to do this. I think it's just generally wiser. You tend to get better performance. And again, when you're getting paid out dividends that are US and they're constantly converting to CAD, the bank is usually making a fee off of that. So be a little bit cautious. But let's dive into this, guys, and take a look at these largest holdings in the Canadian economy. This is really fascinating because globally, tech companies lead. And that is true in Canada as well, with things like Shakepay, held by the biggest YouTubers out there by the likes of me, Kevin. But my favorite part of the Canadian economy is our banks. The banks are literally the largest weighting on our top 10. We've got Royal Bank, we got TD, we've got BNS, we got BMO, we've even got Canadian Imperial Bank in here. And then we've also got some of Warren Buffett's favorites, right? We got things like Canadian Railway. And ironically enough, something that does not exist on the S&P top 10 is energy companies, things like Enbridge, an energy utility company. So our Canadian economy is relatively interesting that way. And that's why I always like focusing primarily on banks. I really love our banks compared to the US. They have really world-renowned, safety ratings. They survived the 2008 financial crisis excessively well compared to places like Greece. And when you take a look at the year-to-date performance, guys, I mean, Royal Bank, the largest bank here, is trading up 25%, 12 PE, starting yield at 3.28%. My favorite bank of them all, because it's primarily focused in residential real estate in Canada, is trading up. Canadian Imperial Bank is trading up 36.84%. Astounding, guys, with a starting yield of 3.95. And even after this crazy rally, is still at a PE of 11.31. TD is one I've been recently buying. I'm going to continue to add to. But when we're talking about the utility side of the portfolio, guys, I really like Algonquin Power here. Enbridge has been a great performer in the near term. I know a lot of you have been picking that up. Actually, I've been debating on adding Enbridge myself, but I kind of stuck down and ended up buying Algonquin Power. But the thing I don't like about Algonquin Alcuin Power, guys, is they've been diluting us as shareholders like it's crazy. I mean, they've almost doubled the dilution in the last 5 years, but year to date, the company's trading down almost 15%, really reasonable PE, and a great starting yield of 4.9% with lots of room to continue paying that out. And I always find utilities do these drown out periods where they just flatline for a couple of years. And then if the company continues to grow, there's usually the stock price picks back up. Other than that, stock that I missed out on, I wish I bought, is Shopify. I use Shopify a lot. It has been primarily trying to push back toward all-time highs here, guys. But these are kind of companies that I want to pick up on dips if at all possible. Like when we saw this dip back here, wasn't really on my radar as much. I don't pay as much attention to this. And when we switch over to the US side of the border, I'll show you stocks that I actually want to buy that I think are better than NVIDIA, or I'm already spoiling it. NVIDIA, can't even get it out of my head right now, right? But we'll come back to that in a second. But first and foremost, guys, if you're on the Canadian side of the border as well, you have no exposure to Bitcoin, it's something that interests you, I think this is going to be very prevalent. I know, don't go away yet. I know a lot of you might hate Bitcoin, but I'm going to make you a crap ton return right now. What am I talking about? How do I make you return on Bitcoin? I've been spouting this for half a year now because it's been making me a fortune for free. And that is something called Shakepay. Shakepay is a Canadian trading platform. And I know a lot of people try and use CoinDesk, but if you're converting money from Canada over there and you don't already own Bitcoin, you're paying huge, huge fees. There are no fees when you're transferring money around in Shakepay. You just e-transfer the money in. They make a little bit of money on the spread. That's basically when you buy or sell, because Bitcoin's so volatile, they wait for a certain price movement and then they'll sell you the purchase and make a little bit. Whereas things like Wealthsimple immediately charge like 2.5% on the spread on the buy and sell. It's crazy. This is my favorite platform, but not for those reasons. The reason I love this platform, guys, is because right now, not only if you deposit $100, do you make 30 and I make 30, which means they lose out on an immediate 60% and you make a 30% return on $100. If you come in through that referral link in the description below, you will get something called Shake Stats. Shake Stats basically is something where you shake your phone every day. It's like a promotion, and they give you free Bitcoin for taking 1 second out of your day to open the app and shake it. And take a look at this, guys. I'm making 63 cents a day right now doing this. And that is $200 a year. That would be like if I had $10,000 of Bitcoin making a 2% return. And I know that doesn't sound that crazy, but we're talking about free Bitcoin that exponentially goes up. This has been going up. It doesn't show to the right zero here, because if I could get that to zoom out to Satoshis, it would show you how it's going up incrementally, but you can see even just by the dollar amount, right? Well, it's all going to say like, so we can see here 60 cents, 60 cents, 59 cents. As we go back, we can see how just because I've been doing this every day, it's been increasing. Now, look, I'm not going to go on about Bitcoin. I hope you didn't leave the video here. You don't have to do this, but think about it. You deposit $100, you immediately make a 30% return. And then so long as you shake your phone every day, you're going to exponentially make free Bitcoin. I don't think it gets better than that, right? So let's go over to the US side of the border here, folks, kicking it off with obviously the S&P 500, which we talked about, trading up 27%. I don't think I got to tell you what makes up the top weightings here. I don't think I got to tell you, I think they're slightly overvalued, and I'm not really buying much because personally, I have built out my own positions. I am looking at buying more VOO in my registered retirement savings plan, but I'm hoping to catch some of these dips, guys. Every now and again, we see these nice little dips here, about a 3 to 5%. That's what I'm looking at after we just had this really incredible run, though nobody can really predict on where things are going to go. But take a look at these top 10 holdings. I own the vast majority of these. I don't own Amazon yet. At some point in the future, it might make its way into my portfolio, but I primarily hold Microsoft, Apple, Tesla, Google. I own a lot of Facebook here. And the one that I'm looking at buying that obviously I mentioned is NVIDIA Corp. Now, NVIDIA Corp, guys, is something that has just been, it's one of these things that I regret not buying earlier because I've known about it forever. I look into it all the time. It never tickled my fancy because I've never understood chips as well as I do now. And when we take a look at NVIDIA trading up 135% with 110 PE, not anything like Tesla. So we can almost say it's fair value compared to Tesla, but I don't like these parabolic runs. Anytime we get a parabolic run, guys, there's always a bit of a pullback. And this is the most parabolic run it has had. Similar to, I wouldn't say similar to Tesla, but I'm hoping for a pullback, and this will be primarily on my radar for a long-term buy and hold. But if I was buying today, guys, for new investors out there, Facebook is the only thing I want to buy. Don't want to buy Microsoft. Don't really want to buy Apple or Google here. I think I'd much rather see pullbacks before I continue to cost average in, but Facebook is the only thing I would gladly throw more money at these levels. It is pulled back. It is still trading down, but well below its average, trading means here. We're talking more about like a technical basis, but I mean, this thing should easily be a $400 stock. So I got no problem buying this under $1 trillion. It should be larger than Tesla, yet it's not. So I'm going to pay a lot more attention to this if you're a newer investor. But for me personally, because I already have weightings in all these other companies, which again, if you don't own them, you want to own Apple or Microsoft, start a small position. I mean, start cost averaging in, but I would always leave a little bit of money on the side for those days that those dips come, because that's what I'm doing right now. I'm really just reinvesting dividends and stacking cash. I am by no means in a rush to be offloading into this market. It just doesn't make sense to be doing any large lump sum investing, especially if you have a built out portfolio already. And this is my personal opinion. You do what you want. You do what you think is right. I'm not a financial advisor, but at this point, folks, I will pass the question off to you. What do you guys think about all this in that comment section below? I'd love to hear about it. And I hope the quality's gotten a little better. I've upgraded my cameras. I got better mics. Zoom degrades it by a little bit, but hopefully you're enjoying some of the better quality content. So stay cool, stay awesome, and I look forward to catching you tomorrow.